Now onto the bond market moment.
So we got through day one of the Fed chair and didn't get anything out of left field. He stayed the course with his patience and data-dependent language that he used last week at FOMC as well. We continue to see rate cuts priced in for later this year. But one interesting talking point I'll take away from the Fed chair's testimony on day one. Prior to FOMC, we saw one rate cut priced at October FOMC, and after, we saw October and December fully priced. Then we heard from Fed Governor Waller, also heard from Fed Governor Bowman. They talked about rate cuts in July, and all of a sudden now we're seeing a rate cut priced into September. So we didn't see the market shift back to the Fed chair's FOMC pricing. We saw it hang and stay where it was after. So maybe the Fed chair losing some of his luster, or perhaps one of his successors is gaining ground. But ultimately, we see the market pricing in two rate cuts later this year, one in September and one in December. Now, what does this mean for 10-year? Well, 10-year note yields, which have traded in a range of roughly 430 to 450 for the month of June, are now trading below 430. So we broke out to the downside. Didn't see a huge breakout, but we did move lower. It'll be interesting to see if that stays the course, because now the bond market may be looking more closely at the data and inflation and not listening so much to what the Fed chair might be saying. So as we take a step back, more interesting data points this week. We have the Fed chair today. We have more auctions this week. And then Thursday and Friday, we have claims on Thursday. We have PCE index on Friday. They may be two of the data points to watch as the bond market hovers on its recent lows. It's actually its lows since early May.